Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to the weekly FX Navigator, a segment hosted on Standard Chartered Money Insights. I'm DJ Cheong, investment strategist at Standard Chartered Bank, and I'm here to help guide you through the latest trends and drivers in FX markets. In this episode, we will focus on the Australian and New Zealand dollar, or Aussie and Kiwi for short, and look at their central bank policies, economic performance, and sensitivity to risk-off sentiment. Yesterday, the RBA kept its monetary policy unchanged. This was a slightly hawkish surprise, as lockdowns in major Australian cities and relatively low vaccination rates are likely to weigh on economic performance. The RBA has looked through these issues and reaffirmed its intention to begin tapering bond purchases in September. So, its status quo on monetary policy amid a more cautious risk environment that also includes rising uncertainty around China policies. We expect reduced market liquidity in the last weeks of summer to potentially drive more erratic and volatile markets. The Aussie slide since May this year may have a little more to run, but we expect Aussie dollar to find a base in the coming weeks with technical support around 72.30 and a very strong barrier around 70 cents that we expect will hold any sharp drop. So our message here is to buy the dip and expect the medium-term Aussie rally to kick in as risk sentiment improves. On the other hand, the RBNZ is expected to be one of the more hawkish central banks around, and yesterday's announcement of further mortgage rate controls to rein in rising housing prices is an indication that the New Zealand economy continues to outperform its neighbour. The Kiwi shows more signs of rising than falling further, and a rally above 71 cents would turn the near-term technical outlook positive. However, Kiwi dollar will not be impervious to a broad risk-off sentiment. If seen, we will look for a strong base in this pair at around 67 to 68 cents. On a relative basis, the Aussie-Kiwi cross has touched its lowest level of this year, below 105, and we see scope for the decline to extend through 104 towards 102.40 in the coming weeks. With that, we've come to the end of this week's episode. If you want to find out more about what we've published over the past few days, head to sc.com and look for the latest Market Insights tab. If you're a client, reach out to your relationship manager for more details. Have a fantastic week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.